Now, here's a very shocking fact that approximately 90% of retail traders are losing money consistently in the market. If we want to be different from these traders that are losing money, of which I believe almost every trader has been there. Now, in order for us to escape this threshold, we've got to ask ourselves a few questions, especially with currency trading. Number one, what is a currency? A currency is a means of exchange. If anyone has a set of services that they offer, these services, we exchange money in order for us to receive these services. So a currency is a means of exchange, and every currency in the world is controlled by that country's central bank. Now, a central bank is a public institution that is responsible for implementing monetary policy or managing the currency of that country. So every currency is managed by a central bank. Now, a central bank has a lot of tools that they use in order to assess the value of a currency, and they then have the power to devalue or appreciate that currency. Now, let us sideline for a minute. When we got introduced to trading, there are two school of thoughts we got introduced to, which is the technical side of trading, which is technical analysis, and the fundamental side of trading, which is fundamental analysis. Now, in most cases, fundamental analysis tend to get misrepresented because people confuse fundamental analysis with trading fundamental events, which is like trading NFP or trading GDP releases or unemployment news. But that is not really trading fundamentals, or that is trading fundamentals on a shallow level. We want to dive deep into fundamentals. What we at the Banner Trading Network have actually discovered is that fundamentals have a medium to long-term effect on a currency. So it is not just an event, but it has got medium to long-term effects on every single currency. Well, we can assess this. A GDP or gross domestic product of a currency has medium to long-term effects in whether the currency is going to appreciate or depreciate. And we know that currencies that are doing bad, or countries with GDP that is doing bad, obviously the currency is going to actually depreciate in value. We can see that with an example of the euro. We know that Germany, actually the Eurozone has recently, it almost went into a recession. So economically, there is no growth in the Eurozone. Therefore, the euro ever since December has been depreciating against the dollar. And the dollar has recently received a lot of good news economically. So it means that the USD is most likely in the medium to long term appreciate. Now, one other thing that I wanted to pay a lot of focus on is interest rates, right? Now, we know that at the beginning of this year, we know that central banks have been talking about interest rates. Now, interest rate cuts have an negative effect on a currency, or a depreciating effect on a currency, and interest rate hikes have a appreciating effect on a currency. Now, since the year began, the US dollar and the euro, there have been talks that the central banks, or the ECB, which is the European Central Bank, and the Federal Reserve Bank, which is the Central Bank of United States, are both going to cut interest rates. But the question throughout this year has always, actually, the question has been, ever since the beginning of this year, the question has been, who is going to cut first, right? And we know that because the euro economy is doing bad, they are most likely to cut interest rates first, way before the ECB. And we know that the US dollar is doing good. Recently, we've seen that with their GDP and with their labor figures, the economy is doing very good. Therefore, we expect the Federal Reserve to hold hikes. So we've got the ECB, which is cutting cutting rates, and we have got the Federal Reserve, which is holding rates. Now we can see this divergence in the chart. This one is cutting rates, this one is holding rates. Therefore, Euro USD keeps on depreciating in value, right? And we expect a continuation of this trend. Of course, there will be pullbacks, but in the medium to long term, we are looking at the depreciation of the euro against the appreciating dollar. So fundamentals therefore have to be traded in the medium to long term, but traders have actually minimize fundamental trading to event trading. Now, how then can we trade successfully? We can trade successfully by using these two schools of thoughts. We use fundamental trading for direction. We check GDP, we check inflation, interest rates, and whether we've got risk on or risks off. Now, after we do our fundamental analysis, we then go to our technical analysis. We use technical analysis for our entries, our exits, right? So we use technicals for our entries and exits, but we use fundamental analysis in order for us to see direction in the medium to long term. So fundamentals are very important. Why? Because they assess the country's evaluation in the medium to long term. So we'll do more videos on how to thoroughly do a fundamental analysis and how to use technical analysis against traders that are losing, because there are traders that are using support and resistance and also trend lines that are consistently losing trades. Now, we are going to see how can we spot whether where these traders lost money and how can we use that to our advantage. And also we are going to use supply and demand and some indicators to actually add on our odds as we are going to trade throughout this year. So join me in my next videos as I look into these two, which is fundamental and technical analysis in depth.